Hey guys, we are back and Happy New Year. Lance Martin with Coldwell Banker Town & Country, and we are doing our first market snapshot of 2023. So let's jump right in. So for most, I'm assuming I'm developing a little bit of an audience on this. So if you want information on me and some links to all the sort of stuff that I do, this QR code will get you to my link tree with probably more than you ever want to know about me. This link tree links to almost everything else I have, but at any rate, you can pause the screen there and shoot that one. This QR code will get you over to our market forecast registration, which is coming up here in a couple of months, which we'll be talking about a lot. Very, very excited about that. And speaking of the devil, here we are. So March 15th, 2023, we're going to be at the Riverside Convention Center in a live event. And we'll have Chris Thornburg and a whole bunch of other people. I'm really, really excited about it. And in case you weren't paying attention in the last couple of videos we've done, we have partnered up officially this time with the UCR School of Business UCR School of Business Center for Economic Forecast and Development. Whew, that's a mouthful. But anyway, it's a big deal. We're super excited. So we've got the Coldwell Banker team, us, along with the UCR team, them, and we're going to do this together. We are expecting over 1,000 people at the convention center on March 15th. So if you stick around to the end of the video, I've got a surprise for you. So I threw this in a little bit ago, some news of interest. Our news of interest is the same news of interest we've had for the last several months. We're just keeping an eye on what Chairman Powell is doing. He's doing his thing. I'm not going to spend any more time on it today, but we're certainly keeping an eye on the Fed and what they're doing as it relates to interest rates. So let's jump right in. So Los Angeles County median price. There's some things about this snapshot that got me a little excited as I was pulling these slides together this morning, because things are starting to come together and you're going to see some trends that I think maybe you can make some decisions on. Oops, let me back up. So this is 12 months median price for Riverside County. You can look at our trend bar going on there. And this is the isolated, actually that was 24 months. This is the isolated 12-month version. Again, we've got this peak. This was our trend, basically May of last year. Pretty much everything in our marketplace peaked, and that's where that the top of the camel hump is. Very, very slight trendward down for price. This is the, by the way, let's back up because we're going to talk about this a lot. This is December to December, okay? So if you haven't really paid attention, I've always been doing month to month. So this month or this past month compared to the same month in the prior year, that's what we're looking at here, December 21 to December 22. Interestingly, we're kind of at the beginning of the new year, looking back at the entirety of last year. So I've created a couple new charts. So this is our 2022 start to finish. So this is January of 2022 to December of 2022. And even though there's only a 1 month difference on there, there's some interesting stuff in there. At least I think there's some interesting stuff. So we'll talk more about what that looked like. But if it looks like it's almost flat for the year, it is. It's a little down. We'll show the numbers in a minute. And then lastly, all of our charts now, we have a peak to the current value. At least in the markets we're following, everything peaked in May of 2022. And of course, current is where we are, which is, for our purposes today, December 31st of 2022. So we've got a peak to current. We'll keep a little bit closer eye on that. With the exception of 2 or 3 markets that I've looked at, the peak has always been May. A couple of them a little bit early. Matter of fact, I think we did a city snapshot a month or two ago where it peaked in April. I haven't seen anything peak before April. Most of them are May. So we've got our peak to current for LA County. That's what it looks like. So what does it all mean? So the last 12 months, December to December, okay, we've seen a price change of 3.8%. All right. That's 750. 12 months ago, 780. That's your 3.8% negative. However, 2 years ago, we were at 680, so we're still to the positive. We're 10% above where we were at the end, or basically 24 months ago, 10.3%. So this is the interesting part. LA County, from peak to current, we're down 11%, 11.2. So those are the numbers I think a lot of us are keeping an eye on. For those of you that have been calling for crashes and all the rest of that sort of stuff, well, maybe that's a number you look at. So if we're going to have a crash, or if you're in the crash camp, then you're going to keep an eye on that. And it's 11% in 12 months. Actually, not in 12 months, from peak to current, which is now 8 months. Is 11.2% a crash? I would say not. Is it a correction? Okay. Is it a reset? I don't know. But at any rate, that's where we are with LA County. Year to date, however, from January to December, basically the entire year, we ended up at 2.3% negative for the year. So let's put it together here with the supply and demand for LA County. And a couple of things. LA County is the only, again, we're just doing LA, Riverside, and San Bernardino, but this chart is different in LA than it is for San Bernardino and Riverside, and you guys will probably pick that up here pretty quick. Our 2-year supply and demand chart, I'm going to talk a little bit more on the next one. Same chart, okay, just isolated for the last 12 months. So the good and the bad, okay? The good and the bad is inventory basically has increased ever so slightly in LA County over the last 12 months. That's the good. Well, the bad is, but the open escrows, buyers and sellers coming together over the last 12 months has decreased pretty significantly. Partially that's bad. I mean, if you're a seller, that's bad, less demand, price, is pulled back a little bit. If you're in my business, if you're a real estate agent, well, we need to sell some houses. So that's kind of the bad side. We're selling fewer houses, and if you're a seller, maybe the demand isn't quite as strong as it was before. Not maybe. The demand is definitely not as strong as it was before. So you're kind of feeling that. Now, the good news is the inventory's ticking up a little bit. But there is no good news or bad news, because quite honestly, some of this stuff bodes very, very nicely for buyers. Inventory is creeping up. The demand is a little lower. You guys should be super, super happy, except for one problem, and that's interest rates. And we're going to talk about that here in a little bit. So before I go to the next chart, because it pretty much holds true for the other 2 counties, is I want you guys to look at something. This is in effect last year where you start to see these inventories creep up, 2 years ago. But let's just focus on last year. This is December, January, February, March, April, May. So if we trend like we have basically for as long as I've been doing these charts, we should start to see inventory every month, over month increase, probably until at least June or July. We'll see. A lot of, again, I think will be interest rate dependent, and will also very much be dependent upon, are we in a recession? What's the news say? What's the tone? What's the feel of the consumer out there? But we should be at the lowest peak of inventory for the year, generally speaking, somewhere between December and January, maybe February. Inventory is at its lowest, and then we go from there. So we're at that point where it should be at its lowest. So we'll keep an eye on that. This is the supply and demand chart. Yes, supply of inventory, not supply of demand. This is our absorption chart. How long would it take for all the houses on the market to go in escrow at the current rate? If you're looking for some hope, or say, wow, I've been just kind of bummed out about this market, when this bar starts to come down, that in effect means that the supply and demand is becoming a little bit more balanced. Or let me rephrase that. It's becoming, the absorption is quicker. The bigger these charts are, the longer these homes are taking to sell. That number, by the way, is a 4-month absorption right now for LA County. It would take 4 months if all the houses on the market today, nothing else came on the market, for the rate of buyers to consume all of those houses down to 0, which of course never happens. But that's what we're looking at with an absorption rate in LA County of approximately 4 months. So again, what does all of this mean? Well, we have 4.3% more listings on the market in LA County than we did a year ago, 12% less than 2 years ago. This again is the killer. We only had 2,100 sales. That might sound like a lot, but this is the entire county of Los Angeles, everything, okay, only residential, but all statuses of residential, single families, condos, big, little, everything. So only 2,100 houses is rough, 34% fewer sales than 12 months ago, 41% sales than 2 years ago, and that's why broker owners and agents like me are like, oh my God, we're dying over here. It's just been rough. So median price in Riverside County. So again, the charts are going to be similar, but you're going to, I think, see some stability as we get into Riverside County from a pricing standpoint. This looks a little bit better than LA County. Well, it looks a little bit better than LA County because it is a little bit better than LA County from a price standpoint and what we've seen the price do. And if it looks like it's kind of leveled off here a little bit, okay. Looks like it's kind of leveled off a little bit here to me too, even though we did see a little bit of a pullback between November and December of last month. So we'll see. Talk a little bit more about median price when we get to San Bernardino County. For those of you that are, Lance, I don't know why you do median price. You should do average. We'll talk about that in a minute. So this is the, shall we say, the start to finish for Riverside County. This is the January to December number, and again, it is what it is, and we'll talk about what that number looks like here in a minute. And this is our new chart, our peak to current. So this is the May to December. That number is 8.8%. For those of you that are skipping ahead, we've seen 8.8% drop in median price from the peak. So where are we? Current price in Riverside County, 540. That's 2.7% less than 12 months ago, but it's also 17% higher than we were 2 years ago. I haven't mentioned it today, but if you go back and look at the other videos, basically we saw, a 40% appreciation, 20% in 2020, 20% in 2022, or 20% 2020 and 2021, so we're eating into that, which is why folks like me aren't overly concerned by an 11% drop in value in LA County or an 8.8% drop in value in Riverside County. No one wants to have bought at peak and then be told 8 months later, 9 months later that your house is worth a little bit less, but I don't think there's any time to panic, because at least when you bought your house back then, you had a much lower interest rate than you would have gotten today. It's all about payment, at least partially about payment. So supply and demand in Riverside County, again, we're going to get to my good news, bad news kind of a thing, the good, the bad. This inventory, though, I got to tell you, this is kind of exciting, even though we're all dying for more inventory. This is last year, and again, this was the lowest level of inventory in all of last year, which was December, and then we just started to charge up from here. We've been charging down, but that number's big. That's a 36% increase in listings from December to December. So as much as we've been screaming, we need more inventory, well, guess what? We have 36% more listings in Riverside County than we did December of last year. That's a good thing. But what about the bad? Well, the bad is it doesn't look so drastic, but that's a 29% drop of buyers and sellers coming together. More houses for sale, fewer buyers coming together, the good and the bad. So that's the tough part, and we'll talk about the ugly and why this is all happening here in a second. For those of you that are, wait a minute, Lance, I got the good, I got the bad, where's the ugly? Stand by, we're getting there. Same chart we did for LA County. This is our absorption rate, month supply of inventory. In LA County, it was 4 months. Riverside County, 3.1 months. But again, the bars are coming down. I like that. So where are we? We've got 36% more listings in Riverside County than we did a year ago, 37% more than 2 years ago. Again, the absolute killer, 1,200 properties sold, 30% fewer than a year ago, 30% fewer than 2 years ago. That's been our trend. And generally speaking, by the way, these are COVID comparisons. So we're coming out of COVID. I probably got to remind myself of that sometimes. We had extraordinary sales periods in the fourth quarter of 2020 and the fourth quarter of 2021. Extraordinary. They've never been like that. Let me back up. So given that they've never been like that, and we generally have crappy October, November, and December sales periods anyway, for me to stand up here and act like this is unusual, it's probably not completely fair to sit back and say this is unusual, because we're comparing it to periods of time that weren't normal. It was not normal to have extraordinary sales in those months. I mean, dirty little secret, guys, is real estate kind of goes dead, so to speak, from an activity standpoint in the fourth quarter of every year, and quite honestly, it barely starts to come alive in the first quarter of every year. Generally, most of the sales, or a significant percentage of the sales, are in the second and the third quarter of every year. So when we say we're down 29, 30%, we are comparing it to a period of time where the sales were frankly just extraordinary. Again, based a lot on interest rates, or the attractiveness of interest rates during those period of times. So San Bernardino County, I'm going to spend a little bit of extra time on San Bernardino County, because if you recall last year, this is the 24-month chart. I'm going to bring it to the 12-month chart. Last month, I said, wow, what happened to San Bernardino County? We saw a big drop in the median price. I wasn't expecting that. That was unusual. And again, this is where I'm going to, for all of you that are screaming at your camera or your phone right now saying, Lance, don't use median price. Guess what? I'm going to continue to use median price as long as you, in my opinion, as long as you're looking at that median price over the long run, and I've been using these exact same program and these exact same charts for 16, 17 years, all we're looking for, in case you guys haven't figured this out, all these are doing is establishing trends, okay? Nobody is going to base the sales price of their house based on, oh, the median price in this particular area is $550,000 or $700,000. It's just, we're just looking for trends, all right? So don't get overly hung up on median. However, one thing I love about median, when you do have a little bit of what looks like an unusual pullback, every single time I've ever done this, it's always balanced itself out in the next month, always. So guess what? It balanced itself out in the next month. So we had the weird little pullback in November of 2022 for San Bernardino County. I will tell you, I didn't research as to what that was. The only thing that I can think of is there must have been a very large block of homes that sold for a much reduced level or sales price. I suppose if I was a little more curious, I'd go back and find out why that exactly happened. But at any rate, we're back to what I think would have been normal. So in other words, this bar probably should have been somewhere in this area closer to the trend line last month. So what does it all mean? San Bernardino County finished the month to the positive. And again, I normally save this for the last slide, but that's up 1.4%. So they finished, I said the month, finished the year of 2022 up. San Bernardino County median price rose 1.4% in the calendar year 2022, and there's the chart that shows it. Just to back up, because I want to just prove my point even more, had this trend continued, that number would not have been up, it would have been negative, and it would have been negative significantly. I think that number would have been somewhere in the neighborhood of 7, 8, 9% negative, which is why you cannot base any decision you're going to make based upon one little month blip, up, down, sideways, whatever it happens to be. So anyway, so let's finish up San Bernardino County. This is the peak to current, 6.7% May. So San Bernardino actually has fared the best. And for those of you that are really watching my videos on a regular basis, a couple of months ago I said, wow, San Bernardino is outperforming LA County and outperforming Riverside County. And then last month, that little chart got blown up. They were worse, underperforming Riverside and San Bernardino. Well, guess what? Now they're outperforming them again because our charts are back in balance. $480,000 for San Bernardino in the last 12 months. By the way, that's December to December. Lance, how could that be 12 months? That's just the way I do it. That's December to December. It is down 0.6%. I'm going to skip ahead. The year to date, that's the entire year, January to December, up the 1.4%. But from peak, down 6.7, which is still down, but it's down less than LA and it's down less than Riverside County. So what's San Bernardino County looking for supply and demand? Charts look very, very similar to Riverside. Very, very similar to Riverside. So again, the good, the bad, more inventory, fewer sales, very, very similar. So I would anticipate which by the way, real quick, I just noticed this now. San Bernardino County is a little different than LA and a little different than Riverside, where we actually saw inventory not increase in the month of January and February. It didn't increase until we got to March, and then it kind of creeps up for March. So I don't know. Are we going to have more listed inventory in the 3 counties when we do this next month? I'm going to say yes, but is it possible we have like a little, I don't want to call it an anomaly, but is it possible that maybe one of the counties stagger a little bit or stutter off the line in 2023? I think so, but actually I don't think so. I don't think that's going to happen, but it's entirely possible. So there we are. Here again, every single county, the absorption rate has gotten lower, meaning there are the number of buyers on the market takes fewer months to absorb, which might be counterintuitive. Lance, wait a minute, you're putting fewer escrows together, but the inventory is higher. I know you got to take a little closer look to it, but the absorption rate looks good, and it's 3.4 months of inventory in San Bernardino County. So here are the numbers: almost 20% more listings from a year ago, 19% more listings than 2 years ago, and again the same story, but I'm not going to say it again. We're comparing this to COVID months. So December last year, December the year before. Okay, extraordinary months, not so extraordinary now. So what do we got going on here? Guess what? Our Spotlight City, we're not doing a Spotlight City next month. We'll visit it next time because I want to talk to you a little bit about our forecast coming up. So let's talk about interest rates before we wrap up. And here we are with the interest rates. By the way, here is the ugly. All right. The reason these charts are the way they are, the reason we've seen pullback in these median values from peak to current, quite honestly, is the interest rates. I don't know that we would have seen anything like that if Chairman Powell was not just hell-bent on raising the Fed funds rate up, slowing down the economy, and basically doing some price destruction. We've been talking about it now for months and months and months. Now, this is the deal, though. Yeah, this is what's caused the problem, but they seem to be improving. So I don't know if you can see this very well, but they're ugly, but they're improving. Maybe because I don't know. The people that I'm talking to come to our market forecast here on March 15th. A lot of people I trust seem to think interest rates will be below 6 and even in the mid, maybe even low 5s at some point in 2023. We shall see. This is more or less unchanged. Today actually is January 7th, okay? These were as of Friday, Saturday, January 7th when we're shooting this. So this was yesterday. This is a great rate, given great credit, but you're basically, let's call it 6 3/8. And this is the old Google machine that we pulled up. If you go to Google right now and you say, hey, I've got a FICO around 750, this was as of yesterday, the rates are a little higher. Talk to your mortgage professional. Don't use guess what, we can get a 6.7 or 6.3 rate. Maybe, maybe not. Depends on you, your job, your credit, the whole 9 yards. But again, I've labeled the interest rates the ugly because they've been ugly for months and months and months and months, at least going on the last year, truly have really stifled the demand and crushed some prices. But I think they're improving. So I don't know, maybe it's not fair to call the interest rates ugly. We seem like made a little bit of progress moving forward. So I'm going to close today with our market forecast is coming up in a couple of months. March 15th, Riverside Convention Center. You guys will be getting blasted from me for the next several months with invitations and whatever it happens to be. So if you're interested in that, click the QR code. That will take you to our website. Just so you know, the website has still got a lot of work to be done. We don't have all of our speakers confirmed. We have a lot of things on this that quite honestly, we kind of do at the last minute as we go. But for those of you that are familiar with our forecast, and we normally have 10 to 12 different speakers / panels, we'll have something where 10 to 12 different speakers / panels. So if you're interested, hit the QR code. And if you made it to the very end of this video and you want a free ticket, send me a text message. Just say, hey, I watched your video. Send me a free ticket. I'll send you back a comp code. And otherwise, if you haven't made it this far, it's going to cost you $100 to show up. So at any rate, Happy New Year. I think that's my last slide. It is. Happy New Year, guys. Have a great year. We'll see you next month. And hopefully we'll also see you on March 15th at the forecast at the Riverside Convention Center. Take care.